Hello and welcome to this big starting up special here, Venture Capital, the year in review and the year to look forward to. I have three fantastic panelists, Pradeep Thagare from Intel Capital, Niren Shah of Novus Venture Partners, and of course, Suvir Sujan of Nexus. And we have Alok Mittal joining us from Delhi, four leading lights of the venture capital world. And it's been a big, momentous year in the world of venture capital. We've actually put together a small a package to just take you through what's happened, and it sort of sets up a discussion for the year ahead as well.
Roll back to January 2011. The first big announcement was LetsBuy.com's fundraising of $6 billion from Helion, Accel and Tiger Partners. Yes, Let's Buy. And that set the mood in the VC world, who got into a buying spree. Next up, Snapdeal raised $12 million from Nexus and Indo-US. And Myntra with a $14 million fundraising from Tiger Global. The next quarter saw Redbus raising $6.5 million from Seed Fund and Exclusively.in raising $16.5 million from Tiger Global, Accel and Helion. Nexus got into the groove by leading a $9 million round in Yebi, followed by a big $40 million investment in Snapdeal along with Besmo Ventures. Closing out the year were two large deals, Fashion and News fundraising of $40 million from Norwest and Intel Capital, and Kanan leading a $40 million round in Ashok Souta's Happiest Minds. This pegs the entire venture amount invested in venture capital close to $998 million this year over a total of 182 deals. The biggest sectors, not surprisingly, the $476 million in IT and ITES with a total of 97 deals, and banking and finance coming second with a total of 15 deals.
Suvir, big year in venture capital, 55% up. Though global signs are still uncertain, what's really contributed to this growth?
Reason for this growth has been a belief that the internet has arrived in India. And I think there's been a push towards e-commerce, as you pointed out earlier as well. And there's a belief that e-commerce will supersede the whole physical retail wave in this country. And therefore, there will be a lot of vertical e-commerce companies that will actually serve the entire country's buying needs. And so I think most of the venture investors are taking large bets on e-commerce.
Great. So Niren, the delta is, Suvir is pointing out, is e-commerce, right? And that's almost $250-300 million that has gone into e-commerce this year. And you guys have also made recent investments. Where is the belief in e-commerce really coming from?
I think there are three beliefs, right? One is that if you look at the internet as a media, and worldwide, if you look at internet, a lot of monetization actually comes from e-commerce. Right. And I think we hit the inflection point early 2011. Okay. So one is the inflection point. Right. Two is that organized retail. Right. If you look at the development of organized retail in India, it's still at its infancy. So we think that e-commerce can actually leapfrog and can actually take care of some of these things. And the third thing is, I think that finally we're starting to see that there is enough of a proliferation of websites. Right. So far you saw that there was some demand, but there was not enough supply. Right. And we're seeing entrepreneurs come out, and we're seeing a lot of repeat entrepreneurs, and we're seeing that that's kind of helping, help VCs make the bets in the e-commerce space as well.
Pradeep, we've recently seen investments in Lenskart. There's been a watch cart. Practically every product is building a store around it, right? What's your individual take on this? You think individual product categories are big enough stores? Because in the online world, as opposed to the offline world, it's just one click to go from one place to the other. And history suggests that internet has been a sort of a winner-takes-all market.
I think there's a couple of points. Right. One is it's a very nascent ecosystem, right? We have just started on this.
Right, right.
So you are going to see all kinds of niche plays. You're going to see people experiment with different things. Sure. So it's not surprising that you're
And there's enough venture money to back all that.
There's enough venture money and interest to back that.
Right.
But you're going to see these people do things that are narrowly focused as well as very broadly focused. Right. So this ecosystem needs to evolve and mature before you get to the consolidation phase. Right. But ultimately, there has to be consolidation in this phase. You can't have 1,000 categories. Sure. Ultimately, there will be a consolidator. Right. And the question is, who will be the consolidator?
That could be one big one acquiring a lot of these smaller guys, in your view.
Or there could be multiple of these big ones that specialize in different ways. I think India is a large enough market, and it's still a young enough market that it's too early to call that.
Okay. Suvir, you guys are backing Yebi. So what's your belief 2 years from now, 3 years from now? One winner or many winners?
No, I think I agree with Pradeep. I think the question is that there is probably will be I believe, several horizontal plays in the market.
Okay.
Just like you have large horizontal retailers in other parts of the world, you'll have large online retailers in India. And so I do think that there will be several large retailers. I don't believe that there's a winner-takes-all market here either. And I also do believe there'll be vertical plays as well that will be successful and deep in various verticals. But the question really comes down to is that at the end of the day, on the vertical sides, can the horizontal plays, if they enter those verticals, give the vertical guys run for their money?
Your take on funds like Tiger coming in and really roaring into the market and making large investments. Naren, what's it doing for the ecosystem? Is it sort of prompting you all to step up the game and increase your own pace?
I think our pace is not determined by someone else. Our pace is determined by what we see the market and kind of the entrepreneurs. I think it's helping the ecosystem because I think India's always had a problem of kind of not having enough websites on the supply side, which can, so I have lots of friends who say that, look, happy to go online, what do I do next? Right? And I think that's changed in 2011. So I think all the people around the table who've been kind of funding this, funding good entrepreneurs who give great kind of service to the consumers, it's helping the ecosystem. But again, we're not really being driven by other funds. We're looking at entrepreneurs, we're looking at markets. We have, investments globally in some of these areas as well. We understand the dynamics. We think this is the right time. So we've gone ahead and made those investments.
Pradeep, in your view, is there too much money fueling too few bets? Or in your view, has the time come for such large amounts of money to be coming in?
I think it's a little early for the large amount of money to be coming in. It's being driven by factors other than business fundamentals. Because some of the basic assumptions about this model are yet to be proven. The fact of internet penetration being low in this country, e-commerce transactions being low in this country. So there's a lot of optimism built into this big money coming in. And if it works, that's great because we're going to leapfrog a generation. If it doesn't work, my biggest worry is it's going to set us back by 10, 15 years. So it depends on how you look at it.
So what should the entrepreneur be thinking about?
This is the time to be an entrepreneur in India.
There's lots of money.
There's lots of money. So if you have an interesting idea and a model that seems promising, in my opinion, this is the best time ever to be an entrepreneur in India.
Good time because you can place your bets with someone else's money, you're saying?
Well, it's a good time because, you can actually go out and build a company and not have to worry too much about where the capital is going to come from.
We look at which are the other sectors apart from e-commerce which investors are really looking at? Where are the exits coming from these sectors? So we want to start with you again. Internet has been primarily driven by e-commerce this year. You guys have also made some investments in healthcare, IQ recently, also some clean technology bets. What's your take on these other sectors? Where's the exit visibility for these new sectors?
We've taken a strong bet actually on the whole software space in the last couple of years. And I think that what we believe is that we are seeing a reverse brain drain of sorts over the last half a decade of people coming back and working for captives like Sun, Microsoft, Adobe, etc., who are leaving to start companies that are focused on global markets.
And other sectors, healthcare, banking, finance, healthcare, education, you guys have taken some healthcare bets as well.
We've taken some bets, but we've taken bets very cautiously. If you've sort of followed us over the last couple of years. We've taken bets where we believe that there is a capital efficient model that we can invest in that can generate non-linear return in a venture period and an early stage. There's a lot of, I think, private equity type bets you could take in healthcare and education, which we've not taken. We're not in that space.
Naren, you guys have also invested across multiple sectors this year. What's your take on technology versus non-technology investments? What are the other sectors that are catching your fancy?
So, well, in technology, of course, we're also looking at the rest of the internet, which is non-e-commerce, and those are definitely more non-linear. In the non-technology, we're trying to see things which are both kind of online, offline, to give it that non-linearity, but we also like everything to do with consumer. So whether it is consumer finance, it is consumer kind of, healthcare, education. So those are some of the areas which we think will kind of grow pretty well. I think there you have to be careful that it has some scale. And typically they might be mid to later stage investments, especially if you're looking at foods and these are some of the sectors which we're looking at. But at the same time, we think that the same middle class kind of story plays out to these sectors as well.
Great. Pradeep, you guys are more technology focused than others.
Yes, we are strategic investors for Intel, so our focus is the technology space.
Within technology, any subsectors you're seeing fundamental growth in, or you think it's primarily web driven?
I think most of it is internet driven right now. That's where we see the high growth companies. But this year marked two interesting investments for us.
Right.
One is one of the, I would say, first real silicon deal that we have seen,
sure.
Sankhya Labs that we funded.
Right.
And the other was in the healthcare space, a robotic surgery center.
Sure.
So very unusual deals from a technology point of view. We haven't seen this in the 12 years that we have been investing here.
Sure.
So we are excited about some of these newer ideas coming out. Right. I wouldn't say these are necessarily high growth areas because we are not seeing a lot of deals.
Right.
But we're starting to see things come up that are making us sit up and take notice.
Right. So Alok, you guys raised a lot of eyebrows by investing in Happiest Minds. Services investment, almost the Sequoia model 7-8 years ago. What's your take? You think, in your belief, services investments can still give nonlinear growth for a venture investor over a short to long term?
We definitely believe there is value in services businesses. Prior to Happiest Minds, we've been invested in iYogi, United Legs, and we've seen rapid scale up there. So we continue to diversify within the technology space that we invest in. And to your point earlier on the exit possibilities, I think it's also a way of diversifying the exit risk.
So I want to move to exits. Suvir, Nexus has seen 2 exits this year, right? And both of those have sort of been companies which have been built for the US markets or built for the global markets, right? Is that in some way a hypothesis that, hey, the exit market there is advanced, it's easier to build a technology in India, so why don't we build in India and take it there?
Yeah, I think like I mentioned earlier, we've taken a focus a few years ago that we believe that there will be companies that will be built out of India for global markets. The question, if you studied the US markets a decade ago, you see 1/3 of the technology startups in the US are started by Indians.
Sure,
in the US, probably even more.
So might as well get them here and start it here.
So we're seeing some of that Indians who would have stayed in the Valley or stayed in the US are now back in India.
Okay.
So the same talent exists here. It's happened only over the last few years.
Right.
And so we believe the same talent is capable of creating global companies out of Bangalore or Pune or Bombay or Delhi. So the hypothesis is that, and I think the markets are for global markets. So most of your acquirers will end up being companies that are global.
One of our earlier points, which is on large investments coming into the country, we've also noticed that, hey, there seems to be a lot of money at the top for $10 million, $15 million sort of deals, but very little small money, very little funds which are focused on 1 crore to 5 crore sort of deals, right? Alok, your sense, is venture investing in this country top heavy?
I don't think so. You will always see large ticket size being announced, and there are various reasons, why that happens. I think in the e-commerce space, if you take it, most of these companies started with $1 million or $2 million. So, for everyone around the table on this panel, for example, I think the $1, $2, $3 million deals remain the bread and butter. And sure enough, once in a while, you're going to see a $10 million check there. In fact, going forward, I think there is so much activity we are seeing around angel funds, incubators, and mentors and advisors that, next year we might very well see the reversal of the pyramid. Where you actually start getting a lot many more seed investments, which can then feed into the venture pipe.